talk about the outlook for Senco Gold. And we've got with us Mr. Suvankar Sen, who's the Managing Director and CEO, as well as Sanjay Banka, the CFO of the company. Good to have you both on board. To begin with, then, Mr. Sen, give us a sense as to what demand trends were like in Q1, and do you think that this sort of 30% growth can be extrapolated for the rest of the year as well? Because it has been a strong quarter.
So see, the demand trend in the Q1 is driven by, the Akshaya Tritiya, which is an auspicious season for the jewelry buying customers. In many states, we have the new year that begins. And especially what we have seen is that after the bonuses that the people get after the end of the financial year, they usually try to use the bonuses to buy something auspicious. And then there was the summer wedding season, which also acted as a factor in which the growth was being led on. And one more thing that really helped on the growth for the jewelry sector was the fact that government announced the HUID hallmarking to be done compulsorily. So there were a lot of customers who were trying to exchange their old gold jewelry and buy new jewelry with new HUID hallmarking done on the jewelry. So these were the various factors we saw that led to a very strong Q1 numbers. But at the same time, we will always, this is our first year of listing, and we would like to say that we have seen that the H1 or Q1, Q2 usually has a very conservative approach in terms of their performances compared to the Q2, which is the festive season and the wedding season that comes in. And last year versus this year, while the Q1 numbers have been very good, but we must watch quarter on quarter on the performance on how the consumer demand continues to remain strong, or it kind of becomes a little conservative. And accordingly, we should not just do a blank extrapolation of the whole year based on just the Q1 numbers.
Sure. Sanjay, what's been your reading on the financials and how Q1 has been and what the visibility for the full year is?
See, if you see the number, this year we have grown in terms of YOY, we have grown up by 29%. Now, this 29% growth has come in terms of gold and diamond both. So in gold, we have got a YOY growth of 22%, and in diamond, we have grown by 50%. And there is also a volume growth. So gold has grown by 8%. Diamond, as we said earlier, diamond has grown by 34%. So clearly, we are very excited by seeing the growth in this quarter. And as we say about the future, we are very excited about the future. So this being our first month, and if you see our growth in last few years, our CAGR was clearly among the best in the industry. We grew by 20% CAGR in last 3 years. Our LFL growth has also been very high at 22%. So we are very excited about the future, and we are sure that we will meet the expectation of the market and our stakeholders.
Fair enough. What is the outlook then, Mr. Sen, when it comes to your EBITDA margins? Because that has been under pressure during the quarter despite the increase in the studded share. What's the reason for that? And I just want to understand what is a sustainable level of your margins this time around. 5.1% is what you've clocked in, while in the past, the range has been 7 to 8%.
Yes, so we've seen a 0.9% of fall in the gross margins. It is led by the sales channel. We saw a lot of old gold exchange happening. Our franchisee, which has also grown, the share for their business has grown, but then the margins for the franchisee business are lower compared to the own store sales that we do. So overall, in terms of the products that are being sold, the channels that have seen the growth, we have had this kind of a 0.9% degrowth. But we will continue to see the festive season is up there. We should be optimistic, and we will have a range bound of a similar gross margin, ranging between 12.5% to 14%, 14.5%, based on the diamond sales growth that we see or the other channels that will pick up in the coming season.
So just to build on this, when we talk about EBITDA margin, our past EBITDA margin has been in the range of 7 to 8%. And we feel that the EBITDA margin will be in the range of 7 to 8%. So quarter one exactly is not represent the structure of our margin for the full year. So let's wait for 2 more quarters. As we said that in quarter 3, we get a full depth of our margin. So for the full year 23-24, we are confident that we'll maintain the EBITDA margin in the range of 7 to 8%.
Suvankar, let's talk about expansion because previously you've talked about how you're seeing better demand in the northern region. Will you then continue to expand more in north and east regions, or is the strategy to diversify further and look at other areas as well?
No, our focus will continue to remain on east and north part of the country. As mentioned earlier, that we will continue to leverage the goodwill of the brand that we have already created in the eastern and northern part of the country, penetrate into the tier 2, 3, 4 cities of those zones. So that continues to happen, and we will do the same.
And what is the outlook then in terms of, Sanjay, your same-store sales growth in the quarter, and how do you see it shaping up for FY24?
So same-store sales growth in this quarter has been 22%. So out of the 29% YOY growth, and as we said that this year, the franchisee performance has really picked up as against last year. So we are very much hopeful and confident that the same-store sales growth will be in the range of 22 to 24%, and that's what will give us a good, solid full-year number as we proceed quarter on quarter.
All right. And also, can you tell us, Sanjay, how many stores is the company expecting to open then? And what is the outlook in terms of how many you would look to open on a franchisee basis, in particular in the Middle East?
So till now, we have opened 5 own company stores and 1 franchisee store. We have a very good pipeline of the franchisee store. We are seeing quite a very good interest in the franchisee as the company has got listed and based upon our credibility. So we look at least 7 to 8 new franchisee store for sure. Our own store in the past, we have rolled out at least 8 to 10 stores. So since we have received the IPO funds, we are clearly looking at the numbers between 14 to 18 stores for sure. For the Middle East, no, we are still keeping our plan close to our chest. We have received the requisite approvals, and we are in the advanced stage of working on the same. We'll disclose it as the time comes.
Appreciate your time, gentlemen. Thanks so much for joining in and giving us a view on how things are shaping up at Senco Gold. So yes, they're optimistic about the festive season, looking at a 7 to 8% margin trajectory for the full year. Same-store sales growth has been about 22%, and the focus will be on the tier 2, 3, 4 cities.